The amount of pain that the Federal Reserve and their mismanagement of interest rates in the economy has caused, it's gargantuan. This is the core problem. This isn't a blue thing or a red thing. It's not a liberal thing or a conservative thing. This is a underlying monetary thing that is causing enormous unnecessary pain for millions and millions of Americans. It's been going on for a long time. And unless we diagnose the core problem and solve it, it's going to continue to go on.
Good to see you, Larry. How you doing?
Great, Danny. Very nice to see you. I'm happy to be back on your show. Miss Peter, but I'm sure you'll be just as good or better.
Yeah, he's crushing it. Did you see he's just changed the name of his podcast? He's gone back to the Peter McCormack show now.
Yeah, I did see that, and I can't wait to see him interview Liz. I haven't had time to listen to that one yet, but I heard from a few people it's really good.
Yeah.
So I'm looking forward to that. I think what he's doing is brilliant.
That was a pretty special interview, I think. Liz got such a bad rap in the UK, but I actually quite liked a lot of the policies she stood for.
I don't know enough about her to comment. I really don't. I hesitate to get involved just because I haven't followed her carefully. But like I said, I'm really looking forward to listening to Peter interview.
Yeah, it was a good one. Anyway, you finished your book. Congratulations. The big print, it's done.
Thank you. Yeah, it's finished in terms of the manuscript being written. Right now, it's in a process called layout, where you have graphic artists make sure the charts and the spacing and all that is good. And that should take another, 7 to 10 days. I've published, it's up on Amazon for pre-purchase at Kindle. I've announced the launch date is February 14th, but you know what? I bet I can beat that because it's now the 8th, and maybe give me another 10 days. I'm thinking this is probably a late January launch, last week of January kind of launch.
I don't know. The Valentine's release day sounds pretty good. A true love story.
Look, I mean, it's got to be good. I mean, it's got to be right. But the content's done, and I'm convinced it's as good as I'm capable of giving. The layout's got to be good. I want it to look good, and that's what we're working on right now.
Well, I got a bit of a peek at the manuscript, and from what I've read so far, it's brilliant.
Thank you.
What was your idea in writing this book? Why did you want to approach it?
Yeah, thank you. So let me just kind of give you the background. I've been saying this on other pods. I mean, I sat around sometime last year and I watched some program that had the blue side and the red side debating about the election. I started the book in June of last year, so it took me 6 months to write it. This is probably April or May. And I watched people talking past each other, and I was just so angry because nobody was focusing on the deficit or spending or any of the problems that are just so obvious. And I thought to myself, these people are all missing the big obvious problem, which is the money is broken, as we know. And somebody needs to write a book about that. And then I thought, well, Safe wrote a really great book about that, and Lynn wrote a really great book about that, and maybe that's enough. And then I thought, no, people aren't going to, sadly, people don't read books that much anymore, and people definitely don't read books that have a textbook-like quality to them, which both of those have a little bit of that in it. Maybe if I told my story and made it more of a narrative and spiced it up a little bit, maybe that would encourage more people to read it. And so, they'd read the story and learn about sound money at the same time. So when I set out to do it, the goal was to write something that's very understandable for anybody. You don't have to have a finance background. You could be any average citizen doing, it doesn't matter what work you're doing, and know nothing about money, nothing about finance, but read this book and go, gosh, now I understand why I'm suffering. Now I understand why they're screwing me. And now I understand what I have to do about it. So as you know, from having seen the manuscript, it's really divided into 2 sections. The first one is the problem, which is the history of how and why they're doing what they're doing to us and how bad it is. And then, of course, the second half is the solution, which leads everybody to Bitcoin, and then fully explains Bitcoin from a beginner's point of view. I mean, things you know and most of us know, but to somebody who's just, again, knows nothing about finance and knows nothing about Bitcoin, and to kind of walk them into it carefully and completely and tell them the risks and explain to them all the issues, explain to them my concerns, et cetera. And try to provide a credible argument that, this really is not, magic internet money or something insane to be involved with. It's actually extremely rational and very protective of their own financial condition. And therefore they should be, they should start to accumulate Bitcoin. So that's the goal. And as I think you and I discussed pre-show, the Bitcoiners are going to love this. I mean, it's red meat for Bitcoiners. But that's not really the goal. I mean, the goal, and that's why I didn't even put Bitcoin on the cover. I just said sound money. The goal is I want everybody to love it. I want average citizens to love it. I want it to get passed around. I want those hard to orange pill cases to read it and go, gee, I think this guy has a point. Even though I've been against Bitcoin, boy, given all these arguments, maybe I should take another look. So that's the goal of the book. It's a little bit of a simplified version of Lynn's work, Safe's work, Luke Groman's work, Jeff Booth's work, etc. Explaining it for every man, why this is so important. So it's a long-winded answer, but that's the complete answer.
Yeah, the kind of narrative approach to it, though, I think is going to be really good. This, from what I've read so far, this seems like a book that I want to send to my friends and family who don't really understand this, because you bring in stories about your grandfather and your father and how they've kind of been impacted by the Fed's decisions, and I really enjoyed it. But
we all have been impacted. I mean, yeah, go ahead.
So you started the book with kind of talking about America being fundamentally broken right now. And I think that's something that everyone sees. Even people who don't understand why, they see that things are getting worse, not better. So do you want to start by explaining why you think there's a degradation across, I guess, the entire world, really?
Yeah, that's a great question. Yeah, it's not just America. We see it worldwide. I mean, the political systems are failing, the governments are failing, the money is failing, the economies are failing, and many, many people are hurting, and it's terribly sad. And that I try to bring that out in the book and explain all of that. And again, that's part of what drove me to write it, just the knowledge that all this is going on, and a deep memory of what it was like to grow up in America in the 70s and what a great country it was, at that time. And it had problems where, the Vietnam War was going on and so forth in the 60s. But it was so much better than it is today in so many ways. I mean, today is different. We have better technologies than we did back then. But the point is, things are clearly broken. And the thesis of the book is, in my opinion, that the underlying cause that far too many people don't understand and are missing is inflation. And the inflation occurs very simply from government policies, the monetary policies run by the government. And there were lots of steps along the way. I mean, you can go all the way back to, the founding of the country. And I do a little bit. I bring a history of monetary thought all the way from 1789 to present. But of course, I drill down much more deeply on, the foundation, Civil War foundation of the Fed, going off the gold standard in 71. And then all the things that have happened since then, throwing out Glass-Steagall, the GFC, the COVID crisis, et cetera, Silicon Valley Bank, as we were talking about. I mean, it's just what is it? Morgan Housel's book said something, history is a long story of just one thing after another, one problem after another. And that's what's happened. I mean, we started down the wrong monetary road, and we slowly but surely, it's just gotten worse. And until we solve this underlying monetary problem, the fact that the money really is broken, it's very unsound and getting more unsound. I mean, there's a quote in the book about exponential inflation, which says that, inflation basically has to keep getting worse to have the same impact on keeping the economy running forward. And that's why when you look at the Fed balance sheet, Bernanke said the Fed balance sheet was going to go from 1.4 back to 900 trillion, when he first started QE. And of course, the Fed balance sheet today is 7 trillion, down from a peak of 9. And my opinion is the Fed balance sheet is going to go to 50. So, it's a broken system, but the underlying cause is the monetary system. And again, that's what drove me to write the book. That I think we've got 330 American citizens, and how many, 4 billion, first world citizens around the world, or so that basically don't necessarily even understand what the problem is. And so you can't really get to fixing the problem until you understand what it is. And so that's why I try to lay out a very compelling case that the money is the problem.
What Bitcoin Did is brought to you by our lead sponsor and massive legends, Iron, the largest Nasdaq-listed Bitcoin miner using 100% renewable energy. Iron are not just powering the Bitcoin network, they're also providing cutting-edge computing resources for AI, all backed by renewable energy. We've been working with their founders, Dan and Will, for quite some time now, and have been really impressed with their values, especially their commitment to local communities and sustainable computing power. So whether you're interested in mining Bitcoin or harnessing AI compute, Iron is setting the standard. To find out more, head over to iron.com, which is IREN.com. So the root cause of this that you lay out in the book, it's all centered around inflation. Now, like I said, this is the kind of podcast and the kind of book that I want to send to my friends and family who don't understand this deeply. So can we go right back to the start and talk about why inflation drives sort of wealth inequality and has all these knock-on effects?
Yeah, absolutely. Well, So the monetary system is broken primarily because we've kind of got a two-tier monetary system, and the average person doesn't know how to make inflation work for them. You know, when the Fed went to 0% interest rate policies, actually when it went to 1% interest rate after the bursting of the dot-com bubble, and then it went to 0% interest rate policies after the 2008 crisis, what they effectively did was they allowed wealthy people and financial players to borrow for zero cost and invest in assets that would go up in value. And the average person doesn't have that ability. And this is what we all refer to as the cantillionaire effect. And so the average person, when they want to borrow money, they've got to go to a credit card company and pay 25%, which is egregious in and of itself. And that's an entirely different story. But, which, I mean, all those laws got changed years ago. There used to be usury laws in the United States. You couldn't charge that kind of interest. But the mob would blush. But the point is that this two-tier monetary system, where the insiders and the people close to the monetary printer get an advantage over the rest of us, allows them to amass great wealth, while the rest of us suffer the effects of the inflation that we really don't have a way to protect ourselves from. And so the average common man who works for a wage, he's way far away from the money printer. He can't borrow cheaply to buy assets that yield returns. And all he has is his wages. And by the time he gets his wages, all the prices have been driven up by the other people. I mean, we saw this in the United States. BlackRock was out there buying homes and then trying to rent them back to people, which made it hard for first-time home buyers to buy homes. And so that's an example of the problem. But the fundamental problem is that the monetary system, the Fed, has a monetary system that benefits the wealthy and the intelligent who can game it, as against everybody else. And so, what people don't understand, I think, is that, the politicians try to say that the reason we have inflation is that because we've got greedy corporations, but that's not true. We have inflation because the money supply is growing, and the Fed is growing the money supply by lending money to financial actors at very low rates. And that's happened again and again and again. And it's going to continue to happen because the way the system is constructed, when there's this much debt, you have to grow the underlying base supply of money, or else the debt will collapse and you'll have a depression. And of course, that's always what the Fed says, which is, let us print more money or the economy is going to collapse. I mean, that's what they said in 2008. And that's why they bailed out the banks. That if we're not able to print more money, the economy will collapse. It's like they've got us as a hostage. They got a gun to our head. And of course, people were opposed to the bailouts in 2008. The first time Congress voted, it was a strong no. And then the bankers all went back and said, look, if you don't do this, the market is going to collapse. The market was down 9% in one day. And the Congress caved. And of course, then what happened is the cost of everything that everyone was buying went up. Oil went to $150 a barrel. Gasoline went to very, very high prices. Food costs went up, et cetera. And this pattern repeats itself over and over again. And we've seen it for years now, but I mean, really decades going back, but getting worse with each event. Right.
I think the blaming inflation on sort of greedy corporations, it's such a pervasive thing that I think a lot of people believe.
I'm sure
I remember Lynn Alden putting a great tweet out probably a couple of years ago now, where she basically highlighted on a chart of like a CPI chart, the fact that corporations have always been greedy, but this chart's still going up. But inflation, as quoted right now, is something like 3% in the US. What do you think real inflation is?
Oh, well, I think the best long-term measure of real inflation is the underlying growth of M2, which over a long period of time, over the past 54 years, has been kind of in the 7-8% range. So, and I actually think it's running a little bit higher than that right now, because if you look at some of these labor cost settlements and certain sectors, I mean, look, inflation's a tricky thing. They're different. They're always, prices of everything are always going up and down. And so you may be getting a benefit in one area, as demand there becomes soft, but meanwhile, something else is going up. I mean, in the United States in particular, a very inflationary in the last year and a half, probably in Australia too, has been insurance. My home insurance just went up 100% year over year.
Wow.
My auto insurance is up 30%. I mean, that's a lot more than the 3%. And that's even a lot more than the 8% that, the money supply is growing. So there are different pieces to inflation, different prices, different things. I mean, I actually called up the home insurance people and said, hey, this is outrageous. Went up 100%. They said, yeah, but for a few years, it didn't go up very much. And what we realized is we looked at the cost of rebuilding your house, and we realized it had doubled. We used to be able to build your house for $200 a square foot. And if your house burned down, it would now be $400 a square foot. So we need to double the premium. And I kind of like, okay, I get it. I mean, and so, inflation's lumpy because, I mean, I think prior years have been going up 5 or 10% a year. And obviously they fell behind the curve. And then they suddenly realized, oh my God, if this guy's house burns down, we're in trouble. So, but to me, the long-term trend is just look at the money supply. I mean, you know, prices are set at the intersection of demand for goods and services against the amount of money that's out there in the economy. And so, if you double the money supply, all things being equal, ceteris paribus, the prices are all going to double. But I think what really the most recent hit we all took, and there was a great tweet on this, was that in the COVID example, the money supply, underlying money supply grew 42% in the space of a couple of years. And so, imagine having your savings and everything you worked for over your life. Suddenly, whatever you saved, you just lost 40% of it. It's just everything got that much more expensive. And that's obviously why everybody's so unhappy and understands the system is broken, why they're so angry, and why politics is so contentious, because, people are getting screwed. I mean, they legitimately understand they are. But the point, again, the driver for me to write the book was that I just don't feel like enough people really understand the how and the why. And so I wanted to write a book, as I say, that anyone could read. And I tested it on people who had no financial background. And that actually led to a lot of changes. I mean, my wife made a great suggestion of putting in the skepticism section. And there are other sections that I changed. And I've got a lot of footnotes in there. And I mean, some people think, well, are there too many? But I mean, as an example, one person said, what's the Federal Reserve? So I thought, okay. So one of the early footnotes explains what the Federal Reserve is. Because again, I mean, these aren't things that the everyday person, if you're a plumber or whatever, you're out there doing your job. You do your job, you try and put food on the table, you work hard. But one day you realize that your grocery bill's gone up 40%. You're like, what the hell happened? And I can tell them, the book is aimed at telling them what happened and then telling them how we can fight back. I mean, we don't, and telling them the real optimism of this is going to get fixed. I mean, I know we talked before, and you haven't completely finished the book. At the end, I've got a lot of policy prescriptions, and I've got some really optimistic news about where we're going here, because the internet, distributed computing, Bitcoin, etc. All of these things are going to solve this problem. We're not going to live with this forever. It's going to get fixed. I think it's going to get fixed in the next 10 years because the problem's kind of coming to a head. So there's good news here. It's not all bad news.
Yeah, I definitely want to get into that because I probably sit on the side where I think it's going to get messy before it gets fixed, but we can get into that in a little bit.
Yeah, there's some of that for sure.
But first, like who do you think is actually at fault here? Because the incentives are wrong kind of across the board. But does the blame really lie with the Federal Reserve?
Well, it lies in a lot of areas. I mean, it lies with the voters who want something for nothing, and they vote for politicians who spend more than they can, pay for. I mean, it's lots of little actions that lead up to big actions, and there's plenty of blame to go around. I would say, to me, the biggest causal blame, if you look, and when you read the book, you'll see that things really changed after 1971. I mean, we had inflation in the United States post-World War II, but it would always kind of trend back towards the mean, and it wasn't terrible. Going off the gold standard in 71, there's a lot of blame. Nixon should take a lot of blame for that. He had a choice. He could have said, we're going to let gold float, and whatever its price is, that's the price. And that would have been inflationary, but that would have forced the government to have some discipline, and he didn't. So there's blame there. And then since then there was blame in politics, and as they changed the laws and they allowed derivatives to come in, and they created, the Fed got more aggressive. I mean, Greenspan decided that, the stock market was a metric that he wanted to manage. And then, they blew the dot-com bubble, that burst, and Bernanke came in and he cut rates to 1% to blow the housing bubble, that burst. And, we transferred a bunch of money for free to all the criminals that did it. And, it's one thing after another, right? The story just keeps getting worse, as we've all seen and know. So there's plenty of blame to go around, but, and there's blame with voters too, who vote for politicians that make promises that they really are irresponsible and they can't keep, and therefore we run large deficits. There's blame in the executive branch. I mean, Luke Roman did a great job in a recent pod with Preston, where he pointed out that we wasted $8 trillion in the Middle East, $8 trillion to try and secure Afghanistan, which we then gave back, and to secure Iraq, which now sells all its oil to China. I mean, that was an enormous waste of resources. Imagine if we spent $8 trillion building, infrastructure, high-speed trains, spending on our people here at home. I mean, that's a lot of money. And it made, defense contractors wealthy. It made Dick Cheney wealthy. It made, the entire military industrial complex wealthy, but it didn't do much for the average American. And the cost of paying for it has made the average American's lifestyle much more expensive and hard to afford. I mean, one of the things that I often have said is that, if you think of all the technological developments, let's go back to when I was a teenager in the 70s. If you think of all the technology that we've enjoyed since then, the microprocessor, what it's done in the world, how it's made everything faster, cheaper, better. I mean, we all should be working 20-hour work weeks and enjoying fabulous lifestyles. We really should, because of the efficiency that has brought us. And yet, due to these poor monetary policies and poor, governmental policies like spending $8 trillion on wars, we're all suffering from inflation and not enjoying the full benefits of the deflation that we should get as a result of these technological improvements. And so that's laid out in the book and explained in detail because it's sad. And, I see so many people hurting, and then I look at my kids in their 20s and I think, what kind of world are they going to inherit? If we don't fix this, it's not a good thing. But again, back to the positive side, it's getting fixed. I mean, nature really is healing because this fiat money stuff is going to fail. The Federal Reserve is going to fail. And, my grandkids are going to, transact in Satoshis when it's the base layer of money. So there's great news coming, but, we're in a transitional period. And as you point out, I mean, we can all debate it, but there's no doubt that the transition could be bumpy and rough. I mean, most of us have read The Mandibles, and
It's back here
it's a
somewhere.
grim story, right? Yeah, right. It's an interesting book. Yeah.
But it's definitely a grim story. When you say, I think you highlighted something that's really important there with the voters who basically just want to vote for money, whichever party that's offering them the most money. And we still live in a democracy. So how do you get past that in this sort of transition period?
Well, it's a democracy, but it's supposed to be a republic. It wasn't really a democracy in the beginning, but I don't really know. I mean, I think the only solution, Danny, is to take the car keys away from the government. And I think, and then when the government doesn't have the money, they're fail, or they'll have to stay within their boundaries. And I think the back to the nature's healing thought. They can only tax so much, and people are free to up and move and leave and go to other places. And so, my sense is that America will get this right, but if it doesn't, there are other places in the world where one could live. And the nice thing about Bitcoin as a form of money is it gives you sovereignty. You can go anywhere, and you don't necessarily have to stay in a broken system. So I think countries are going to have to clean up their act because people are going to demand it. There's enough dissatisfaction. I mean, there's a chart early in the book that shows about the percentage of the country that trusts the government most or all of the time. And in the 60s, it was like 70 or 80%. And now it's down to under 20%. And so people know that something's wrong. They definitely know that. And what they don't fully understand is what's wrong. But when the currency kind of slowly but surely fails, which I think is kind of we're in the process of, they're going to understand what's wrong, and then they're going to address what's wrong, which is, go back to a sound currency. And then suddenly things will be good again. I mean, there've been a lot of currency failures throughout the history of the world, starting with Rome. But after, and sometimes they're quite bad and turbulent, but afterwards, when you reestablish something on a sound currency basis, you can recover pretty quickly. I mean, the key is to avoid war. And by the way, sound money, I think, helps with that too, because most of the wars. I mean, the book lays that out pretty clearly. Most of the wars have been financed via inflation. I mean, even as I was doing the research for this thing, I learned a lot. And I mean, even as far back as the War of 1812, I mean, they had to suspend specie payment as a result of the costs incurred in fighting that war. And so, people don't like to pay for wars, and people will only submit to so much taxation before they revolt against their government. And so, it's a good thing. When we get to sound money, these wars will, I think, decrease substantially.
I remember reading something about war bonds in World War I in the UK.
Oh, yeah.
And The Financial Times had run a piece basically saying that these war bonds are massively oversubscribed and people should be scrambling to get involved in them. And it wasn't until something like 2005 that they came back and said, okay,
It's
that
all a lie.
wasn't true. Yeah. And they ended up just printing money
It was all a complete lie.
yeah,
Total propaganda.
it's
Yeah.
crazy.
And the same thing in the United States. I mean, in the United States, that was the beginning. That was the first instance of quantitative easing. It was a subsidy of the bankers. With the Liberty bonds in World War I were sold at 3.5%. So a buyer of a Liberty bond would get a 3.5% yield. And the banks ended up being big buyers of those bonds. And the banks were able to borrow from the Fed at 3%. So figure that out. The banks got a 50 basis point free carry for helping finance the war. So the government got its war finance, the banks got a free carry, and what the people got was inflation, because during World War I, and this is in the book, there's a nice chart and a table. Basically from the beginning of World War I until 1920, prices in America doubled. I mean, we had 100% inflation over a 5 or 6 year period, which, by the way, also led to a lot of interesting societal developments, all outlined in the book. I mean, Charles Ponzi started his Ponzi scheme in 2019. I mean, just like SBF did his thing on the COVID stuff. I mean, the parallels are amazing. And the Chicago Black Sox was in 2019, or I mean 1919. When you have inflation ruins societies. It really does. And it ruined Weimar Germany. It's ruined many societies, and frankly, it's close to ruining ours, and might ruin ours if we don't do a monetary reset. So, it's pretty clear. And this is not the thing that's interesting to me is I think a lot of Americans look at us post World War II. Wow, we're the biggest country in the world. This is it's Joe Biden says this is America, right? It can't happen in America. Well, okay, fine. Except if you change all the policies and you do the same policies that have been done all over the world many, many times, i.e. deficit spending, 100%, 130% debt to GDP, et cetera, you're going to get the same results. I mean, it doesn't matter if you're America, you're going to get the same result. So it's really a serious problem, sadly. But, like I say, on the optimistic side, we're going to fix it. So that's the good news. Hopefully this book is going to help fix it, because we're going to get a bunch of people demanding that it get fixed. I mean, and voting for people that will fix it, because they'll understand what the issue is. I mean, it was amazing. We had these debates for this presidential election here in the United States, and there was absolutely zero discussion about spending, deficits, debt, all that. It just wasn't even talked about. Either side. I mean, nobody wants to go there. It's like the dog that didn't bark. Nobody wants to go there, but we've got to deal with it. We absolutely have to deal with it. So,
do you think the politicians in those debates understand the nuance of inflation, or do you think that's why they avoid the conversation?
It's I think to some degree they do, but I also think they figure out poll wise that it's a third rail. Why touch it? It's like talking about peace in the Middle East. I mean, it's a dangerous subject. So I mean, so they'd rather scrum about other stuff, our team, your team, whatever. And so let them scrum about that stuff. I mean, I try and avoid all politics. I just don't want to be involved in any of that. What my mission is sound money. And I've known for a long, long time that sound money is the underlying problem that America and the world really faces. Unsound money, I should say. And therefore, this is not a new and casual development for me. I mean, I've supported Ron Paul in the past. I've been buying gold for 25 years. I mean, pre-Bitcoin, gold was the only solution, right? I mean, thank God Bitcoin came along, but before Bitcoin, you had to be a gold bug if you believed in sound money. So, it's very clear to me. I mean, and I try to lay that out in the book. All the moral implications of having unsound money, and the times that unsound money has been tried in the past, and what happened. I mean, it doesn't work. So that's the message.
This episode is brought to you by River. There are many places to buy Bitcoin, but there's no exchange like River. They have innovative products, phone support, and a dedication to security that you just don't get elsewhere. With River, buying Bitcoin is easy. You can set up zero-fee recurring buys to automatically stack sats, and River also lets you earn daily Bitcoin interest on your cash balance that outperforms most high-yield savings accounts. With River, your Bitcoin is stored safely in multi-sig cold storage, plus you have peace of mind knowing they do monthly proof of reserves and hold all client Bitcoin that wasn't withdrawn to self-custody. Open an account for yourself or your business at river.com/WBD, which is river.com/WBD. So let's do a bit of a kind of history lesson on the Federal Reserve. How did we get to the point where 12 people get to decide the cost of capital?
Isn't it amazing? Well, there's a long story on it, and the deeper book, I mean, I cover it, again, I borrowed information from other books. I mean, so Edward Griffin wrote the best book on it, The Creature from Jekyll Island. But again, the average American's not gonna you've read that book, I'm sure. The average American's not gonna grab that book.
I've tried, but it was too heavy.
Right. It's 600 pages, very detailed. It's hard slog. So what I've done is I've condensed it. I've grabbed the highlights, the things you really need to know, and that is the Fed was formed in 1913. It was formed in a very sneaky way. There's a lot of politics behind that. But basically, the banks operate with a pretty interesting business model. They can print money effectively by fractional reserve lending, and they earn money on money they've printed, so they get interest on money that really didn't exist. It wasn't somebody's savings, and that's all great. And so they can lever up, and the more they lever up, the more profit they make. So that's how bankers become quite wealthy. And as a result of that whole system, that's a great system, except when suddenly you have an economic downturn and all those debts go bad. And if you're a bank, I mean, the one flaw that the banks had in their business model was that in a downturn, they could go bankrupt. If they'd made too many loans and the loans weren't good, guess what? They were out of business. In fact, in the old days, if you're a banker and that happened to you, you might be personally liable for the loan losses. Well, in the panic of 1907, J.P. Morgan, basically bailed out the New York banks, but it was close. I mean, everyone realized, holy cannoli, this banking stuff is really risky. Yeah, we're wealthy when times are good, but bad times mean we're going to get killed. And so what they thought is, you know what, we need a backstop, and we need the government to backstop us and let us control the currency, so that when those bad times come, we'll just get them to print our way out of it. And so that's really what the Fed is. The Fed is a device for the banks to be able to print money to prevent themselves from going bankrupt, so that they can make all the profits in good times and then be guaranteed against going out of business in the bad times, because the government bails them out, which effectively means the taxpayer bails them out, because the government really is the taxpayer, and the taxpayer pays either in the form of taxes or higher food costs. So that's kind of the genesis of the Federal Reserve, and it got passed 2 days before Christmas in 1913, when most of the people weren't there. And it's a fascinating story, all the politics behind it. But it's too long for this podcast. But as you can imagine, the bankers had a lot of smart people thinking about how to get this thing through, and they did. And so this was 1913. Well, soon thereafter, World War I broke out, and we started supporting the Allied side of it, and we needed money to do that, which the government didn't have because the tax revenue wasn't there. And so, the Fed, which originally was, sold to us as a means of, preventing bank panics and, lending against good collateral at penalty rates, which is what Walter Bagot called it, and nothing more. And those loans would be paid back very quickly. That was the sales pitch. Well, the reality is the war broke out, and immediately they needed a ton of money. And so they immediately amended the charter, Section 13.3, and, started printing money. And as I described earlier, they did that Liberty Bond thing where they basically issued bonds and then gave the money to the banks to buy them. And, they got their war paid for by inflation. And so, right from the beginning, not even a couple of years after the Fed was established, they started doing what they said they weren't going to do. And, and then it's been just a long, slippery slope.
It's only got worse since.
It just got worse. And Roosevelt came along, and then Nixon came, it's right. So this is the underlying problem that's been present now. We've had over 100 years to watch it unfold, and it's gotten progressively worse. And I think it's coming to a head right now. So, and that's why I think this book is relatively timely, because I think this is going to be, I call it the big print because I think the big print is coming. The math is kind of relentless. They have to print money, or this debt structure is going to collapse. The United States has $100 trillion in debt. So, on a base money supply of 6 trillion, it doesn't work.
They're numbers that you just can't really fathom. But the Fed is meant to be independent. Do you think it actually is?
Well, that's a good question. Yes and no. It is political. So the mandate is stated, in the amendment after 78 was, full employment and stable prices, which they've defined as 2%, which I don't consider stable, but set that aside. And of course, the 2%, they cook the numbers. But leave all that aside. The third mandate, I talk about this in the book, that's really not talked about very much, is financial stability. And that goes back to the original one, in World War I, which is to say, when things get really hairy, they're just going to turn the printer on because they know that's all they can do. And so to them, the printer is a hammer, and every serious problem looks like a nail. And so, they basically are political in the sense that they're responsible for keeping the financial system going. And that's not a Democrat or Republican thing. That's just a country thing. And, they really are kind of a branch of the government. At various times, they've been more and less political. I mean, Volcker was probably the least political of all the Fed chairmen. Burns was extremely political. I think Powell is trying not to be political, but I think he ultimately will be and is. Bernanke was extremely political. I mean, it kind of varies, but they are locked into a system that they are responsible for. They don't want to be on the watch when the whole thing blows up. And so, really, at the end of the day, and I've got a big section of the book on the Fed and on some people, brave people at the Fed, Daniel DiMartino Booth and a guy named Thomas Honig, who, at various points in time pointed out that what they're doing isn't correct. And Martino Booth worked for Richard Fisher. The Fed is extremely insular, and they do not, those people who've tried to push back on the Fed don't particularly do very well. The Fed defends itself aggressively against any narrative that doesn't support them. And also they really kind of, some of the things they say are just absurdly untrue. And it's not just me saying this. I mean, Chris Leonard wrote a very good book called The Lords of Easy Money, which I heavily excerpt in the book, talking. And I mean, this is a guy who's a New York Times reporter, very mainstream and established. I mean, the book was reviewed by the Wall Street Journal, Financial Times, and given very high reviews. And he more or less said, "Hey, look, the Fed was lying about this." And I mean, I was kind of like, wow, it's pretty interesting to see somebody so mainstream coming to a conclusion that I've held for many, many years. So, the Fed's in a lot of trouble. I mean, in my opinion. I mean, if I were a Fed governor, I mean, I think in 10 years, 15 years, the Fed won't exist. I think the Fed's going to fail,
That's interesting to hear, because I don't know when it was that you first kind of saw the writing on the wall for the Fed, but the End the Fed movement probably really kicked off in 2008, and then it's been really strong over the last few years, especially amongst sort of Bitcoiners.
Yeah, it was a Ron Paul thing. It was, the Occupy Wall Street and the Tea Party and all that. And Ron Paul was always saying, "End the Fed," and et cetera. Yeah, I mean, he was saying it even before the crisis in '08, and he was always been an antagonist of the Fed. But obviously, the '08 crisis was really, as Ron Paul says, it was beyond the pale. I mean, and I have to say, when '08 went down, I couldn't believe my eyes. I was just like, hang on a second. You're going to take interest rates to zero? I mean, that just makes no sense. It's tautology. You can't have zero interest rates, which is effectively, zero interest rates are effectively saying capital is worthless. I mean, by definition, right? I mean, if capital only owns 0%, then why have capital? It makes no sense. And then on top of that, when it's like, well, and by the way, we're not just gonna print a little money, like we did for World War II, with financial repression, but we're gonna print a lot of money, with QE1, QE2, and then QE3, which really became QE infinity. I was shocked. I was totally shocked. And that was actually when I got radicalized for sound money, Danny. I mean, prior to that, I was an investor in technology. I spent my whole career in the venture business, investing in growing technology companies that were, very, very successful, and particularly the internet, which worked out really well for me. And I think maybe that's why I kind of understand Bitcoin better than the average, financial type, because I saw the internet emerge. I participated in it. I believed in it. And I see this as it's deja vu for me. This is all the exact same thing all over again. I mean, the Bitcoin I'm talking about is the internet in its early days.
This is a little bit of a tangent, but I think it's worthwhile. In the book, you tell a story of how you kind of got screwed by Fed decisions in 2008 because you were short the housing market, and then they changed the rules. Will you tell that story?
Yeah, sure. I'm happy to. So, most people have probably seen the movie The Big Short, and Michael Burry's a genius, and he very intelligently. If you were in the financial world and you were paying attention in 2004, when they took interest rates down to 1%, or 2003 to counteract the bursting of the dot-com bubble, and I mean, Alan Greenspan was out there saying, go out and take a HELOC, borrow against your home. I mean, the Fed viewed it as their job to keep the stock market going up and keep the economy healthy, and they did it by blowing the housing bubble. And those of us who were watching could see it. And there's a good chart in the book that shows that. I mean, how quickly subprime grew, and they had these ninja loans, no income, no job, no assets, and it's just nutty what was going on. And anyone in the financial sphere could see it. Many of us did see it. I didn't even know what a CDS was. I mean, that was, boy, talk about a great way to play it. And Michael Burry did, and he played it, and he obviously got wealthy doing it. But I was managing a fund at the time, and I could see that it was a very good area, macro-wise, to short the housing stocks and the finance companies that had gotten very levered up into the housing business. And so, in 2007, a couple of Bear Stearns hedge funds blew up, and I realized, okay, this, it's coming to an end here. And so I put those shorts on, and then in March of '08, Bear Stearns went under, and Morgan Stanley bought it out with a $20 billion subsidy from the government. But I was still short, and it was all starting to work. And I was short Lehman and Ambac and Fannie Mae and MBIA, just a bunch of companies. And the bottom line, it got worse. I mean, over the summer, Indy Mac failed, and then in the fall, Fannie and Freddie fell into, or August, Fannie and Freddie fell into receivership. And then September of '08, it really got intense. I mean, it was like, the guns were, everything was just blowing up left and right. It was very clear that most of Wall Street was going to go bankrupt, as Lehman did. And in the middle of that, so I had these shorts on, and I was up about 50%. This is the fund I managed, and it was a lot of money. It's my money and my investors' money who I was responsible for. And so it was working for me. And on, I think it was September 21 or 2, I don't know, you can Google it and find it. But in the middle of September, mid to late September, the SEC came out and said, hey, you know what? If you're short financial stocks, that's illegal. You got to cover your shorts. And they just put out a blanket, so again, they changed the rules. They didn't want financial stocks to go down anymore. They were trying to protect the insiders. They were trying to protect the banks. And everything I held rallied 50% in a week. And so I was forced to cover out of my winning positions, and gave back all my profits for that year. And had I been able to hold them to the end of the year, I probably would have been up 150% for the year. But they basically changed the rules in the middle of the game to protect the banks and to protect the bankers. So, some people sometimes ask and say, well, why are you so bitter about the Fed? Well, because I thought I was playing a somewhat fair game, which was naive on my part, I'll admit. But it turns out I wasn't. And this, they've done this to Americans, and this isn't just me. I mean, they did this to my grandfather. They did it to my dad. They've done it to millions and millions of Americans. I mean, they did it to my sister. My sister bought a house in California. She just thought she was buying a house at market prices. Well, she was buying it during, going into the housing bubble. She put 20% down. It wasn't subprime. She had a good job. Well, she changed jobs, had to move, had to sell the house, and suddenly the housing bubble collapsed, and her house value was down 50%. Her equity got wiped out. Blah blah blah. So, I mean, this, and there are hundreds, if not thousands, of stories about that. If you're an American, and people my age, I mean, they've had their a lot of people had their net worth hit twice. Once, if they were in the .com thing and they got sucked into that, the .com bubble burst, the NASDAQ went down 80%. The S&P went down 50 odd percent, 47%. In '08, the S&P went down, housing stocks went down 100%, and the S&P went down 50 odd percent. And so, this bubble blowing by the Fed has been, there's a good quote in the book from Morgan Housel. It says, bubbles are extremely destructive. I mean, he said, quote, they ruin lives. And that's true. I mean, that's really true. And so the amount of pain that the Federal Reserve and their mismanagement of interest rates in the economy has caused, it's gargantuan. It's absolutely gargantuan. And so, again, I wrote the book to tell the story, to explain to people that this is the core problem. This isn't a blue thing or a red thing. It's not a liberal thing or a conservative thing. This is a underlying monetary thing that is causing enormous unnecessary pain for millions and millions of Americans. It's been going on for a long time. And unless we diagnose the core problem and solve it, it's going to continue to go on. Now, that's all the bad news. The good news, as I say, is there are systems and things happening. We talk about this in the book that are going to solve this problem, and that's the really good news. And of course, I think the reader of the book, if they listen to my advice in the book, will come away and say, oh, okay, not only is the problem going to get solved, that's good, but I've got a way to maybe protect myself as that problem gets solved. And in my view, that's Bitcoin. And I think, the book makes a case for why that's that's a true statement on my part. And I would just say that that's not financial advice for anybody. I've got to publicly say that. That's just my personal opinion. Everyone should make their own choices, do their own research. But obviously, I am an investment manager, and it's true that I have a large portion of my investments in Bitcoin related things for just this reason I've laid out.
I think one of the kind of lesser talked about things with Bitcoin, it kind of plays into what you're talking about there in the fact that it's a rules-based system. You can't distort the price signals. You can't change the rules. And if you had Bitcoin then, there would have been a way of hedging that kind of exposure with Bitcoin rather than with the housing market.
That's absolutely right. I mean, that's the beauty of this whole system. I mean, somebody recently, I think it was actually a TradFi macro guy who's very good. I respect on Twitter. Said, hey, this Michael Saylor is just like the Hunt brothers. He's just trying to corner the Bitcoin market and shove the thing up to the moon. And I responded to him and I said, no, you're wrong. And here's why. One, the stock to flow on Bitcoin is a lot better than the stock to flow on silver. We're going to produce a lot more silver. And two, more importantly, the reason the Hunt brothers failed is that they changed the rules. The CME came in and said liquidation only and did not allow new buyers and said only sellers. And the difference with Bitcoin, nobody can stop Bitcoin. Nobody can change Bitcoin. Nobody can change the rules. And nobody can outlaw the buying of Bitcoin. I mean, they can, but people with access to a computer all over the world can do it. And if any country were to outlaw it, then that country would be shunned. I mean, China's tried to outlaw it, although we believe there's still a lot of people in China buying it. So, yeah, the fact that it is rules based. I mean, look, the price of money, and the book talks about this. The price of money, in my opinion, is the most important price in the world because it determines capital allocation, and the proper allocation of capital is what determines human well-being. And so, if we want to have higher standard of living for everybody in the world, we have to allocate capital properly. And we can't do that when we've got a Federal Reserve that decides the interest rates are either, 20% or 10% or 0%. I mean, we're on the seesaw of just crazy rate moves in both directions. And that shouldn't happen. If we had sound money, the interest rates would stabilize at a level that balances investment with savings. And that's the key. The interest rate should be the price of savings as against what's needed for investment. And then capital allocators can make the correct decision as to where things should go, where the money should be invested to increase productivity and output for everybody. And, there's just been so much money wasted on stupid shit as a result of, incorrect, capital pricing, right? And that's the bottom line. And I mean, if we all want, look, everybody wants, I know in the history in the past, it was all about the American dream, right? You wanted to be able to live better than your parents. Everything's getting better continuously. And sadly, I kind of see that slipping. I don't, I think my kids are going to have a hard time buying houses right now. I don't think, the American dream that I grew up with is fading or it's tattered. And, but that doesn't have to be. Technology is a great thing. It's getting better, et cetera, et cetera. And so, we can return to that. And we, every generation should live better than the prior generation because humans make progress. But, sadly, with a broken monetary system, we really dilute that progress a lot. So that's kind of the issue.
This episode is brought to you by Casa. For those of you out there who want to protect your Bitcoin, I want to tell you about Casa, the leading Bitcoin self-custody solution. If you're serious about protecting your Bitcoin, then you need a rock-solid security plan, and Casa gives you just that. With their multi-signature security and key management services, Casa makes it easier than ever to take control of your Bitcoin without the risk of a single point of failure. Casa also now has a private client option, which gives you a purpose-built security program with ongoing advisory, advanced verification inheritance, a 24/7 security emergency line, and lots more. To find out more about Casa's private client solution, go to casa.io, which is casa.io. We should get back to the Fed though, because I just have one more question on that before we move on. Do you think we can and will abolish the Fed?
I do. I think the Fed will fail, frankly, because I think there's a high probability that inflation will be so high that the politicians will decide to revoke their charter and return to sound money, or we'll have hyperinflation and we'll return to sound money, or we'll have a monetary reset and return to sound money. And if you have sound money, you don't really need the Fed. And the whole notion of a lender of last resort, it really isn't necessary. I mean, the banks have all convinced us that we need that. But if you don't have, I mean, there's a policy in the back of the book, one of the chapters, and I've got the chapters right in front, is chapter 26 is called policy responses. And I actually, because a lot of people say, well, okay, Larry, you're talking about all this stuff, but, what's the solution? Give me a solution here. And so I laid it out. I said, all right, here's what we need to do. And we need to get rid of the FDIC, and we need to get rid of fractional reserve lending at the levels that we have it now. And we need to get rid of the Fed backstop of the banks. And guess what will happen? Responsible banks will emerge that won't fractionally reserve lend down to 0 reserves or 10% reserves. They'll keep 50% reserves, and things will be sane again. And so if a bank wants to make more loans, they've got to find more deposits, and they've got to pay a higher rate on those deposits. I mean, that's the other thing that's happened with all these interest rate moves. I mean, we talk about how these people, are disadvantaged, or, the average person is disadvantaged because they have to borrow money at 25 and the insiders can borrow it for low rates. The other way the average person is disadvantaged, and this really hit after '08, prior to '08, and this was, I mean, I know this is the case in some of the members of my family, had savings and they could put them in a CD and get 5 or 6%, right? Well, when we went to ZIRP, 0% interest rate policy, those CD rates went to 0. So somebody who might have saved up $1 million over the course of their life and didn't want to risk it in the stock market, put it into a CD, got 5%, it's 50 grand a year, that plus Social Security, they're okay, right? Suddenly you take rates down to 0, you've just taken that income away from them, and they have savings. Those are hard earned savings. That's maybe 50 years of work, and those savings are going to be diluted because everything they buy is going to cost more money. But 2, those savings aren't even going to earn a fair rate of return because the Fed's decided to set the rate of return at 0 to protect the banks. It's like, what? It's just incredibly broken, right? It's just incredibly broken, wrong, and unfair. And again, this is what the book is talking about, right? So,
It's quite funny for someone of like my age. So I was sort of 16, 17 when the financial crisis happened. And
Okay.
so for my entire adult life until like the last couple of years, there's been no concept of interest rates. That's never existed for me.
Yeah, I mean, it's another reason why I wrote the book. Just because I see generations that don't understand. I mean, I'm 67, right? So I felt like, I got to record, what this place used to be like versus like what it's like now. Do you know what I mean? I mean, it's different. It's vastly different, and it's wrong, and it's unfair, and so. These are the points that I try to make in the book, and what I'm hoping is to light a fire, under the readers of the book, and hopefully some politicians will emerge who, realize that sound money is an important issue, and they'll support this kind of thing, and the voters will then vote for them, and we can get this thing to happen. I mean, I'm pretty sure, human beings are goal seeking for better lives, and the Brits used to say, we always do, Churchill said, we'll always do everything before we do the right thing. But, I mean, America, we'll figure this out. I mean, we will get there. I mean, this problem it's getting acute enough now, Danny, in my view, that we got to get there, because everybody, can you find anybody who's, reasonably intelligent and plugged into the world and, walking around thinking, boy, this system we got, this is really great. Everything is just fine and dandy right now. I mean, that feeling just, I don't know
It
anyone
doesn't
who feels
exist.
that. Yeah, I just don't think it exists, right? Yeah.
So I definitely want to get into Bitcoin a bit more deeply. But before we do, let's talk about the debt. Because I had a look just before we jumped on this call, and right now US debt is at like just under $36.5 trillion. Now, we know they're never going to pay that back.
It was 36 when I started the book, but go ahead, yeah.
But in terms of like, what is there anything they could do? I know they're not going to, but is there anything they could do to fix that?
Well, the strategic Bitcoin reserve might help because, so the debt is measured in dollars, right? And, there have been debt crises before, and there have been countries that have been over indebted before. And the US was one of them. After World War II, we had debt to GDP of about the same level it is now. It was actually 115%. Now it's 125. And we got out of it. We got out of it two ways. They did financial repression and QE. They held interest rates down. And then we were fortunate. The demographics were good. All the GIs came back from the war. They got married. They had a lot of kids. They bought a lot of cars. They bought a lot of appliances. And we grew our way out of it. Okay. Sadly, now the demographics are running the other way because that generation, mine, is all retiring. And the generations behind didn't have as many kids. And so it's going to be hard to grow our way out of this one. But really, the way to deal with the debt, Danny, is it's got to be marked to market against something else, which is not to say that it becomes worthless, but which is to say that we need a lot of inflation so that the debt becomes smaller as a result compared to GDP. And that's just a mathematical fact. And so the losers in that are going to be the debt holders who are not going to get repaid in real dollars. I mean, if you own a 10-year or 30-year, the purchasing power of your bond is going down and already has gone down massively against both gold and Bitcoin. And that's only going to continue, in my opinion. And so, when Trump says, for example, Bitcoin is the new oil, in the 70s, they dealt with some of these issues by marking up oil a lot and then establishing the petrodollar based on oil. And so what has to happen here is these other assets need to be written up against the debt. So the gold price needs to be a lot higher. The oil price needs to be a lot higher. The Bitcoin price needs to be a lot higher. GDP needs to be a lot higher. And when all of those things occur, the debt won't be so unpayable. But if you read through the lines of what I just said, for those things to occur, there's going to be a lot of inflation, right? And the book talks about that. So, we've had a 40-year deflationary trend. Buckle up. I think we just shifted gears and we're going in the other direction. And inflation is very much, in my opinion, baked in the cake. The issue is how much inflation. Is it disorderly? Does it turn into hyperinflation? And again, all talked about in the book. But without inflation, the system won't work. I mean, the system is built on inflation. It's built on increasing inflation because, and now, the debt is getting so large that, I think we're on the cusp of another, big print. Of course, therefore the title. But yeah, the debt can get dealt with, and you could really do it with a stroke of a pen. I mean, in theory, you could issue you could do the MMT thing or the Krugman thing of issuing the $1 trillion coin and just saying,
Mhm.
you know what, we're paying off the debt with a $1 trillion coin. But what that does, that means basically what you've done is you've printed, $36 trillion. The Fed balance sheet right now is 7. So, just think through the math on that of what the inflation would be if you decided to go in that direction. Okay, fine. We've got the debt problem solved. The problem is the prices of everything just went up 300% or something, right? And I mean, so, I mean, the good news for in that scenario, by the way, though, the good news for the working person who doesn't have a lot of debt, maybe, and doesn't have a lot of assets, is let's take the plumber example because I like that just as kind of the average working guy. The plumber. I mean, people are still going to need to have their toilet fixed,
Mhm.
and that guy's got a very useful skill. And if he's young, whatever the new monetary unit is and whatever it buys, people who have skills will then be able to work in that new monetary unit and get paid fairly and pay for food. And, I mean, so what I'm kind of describing is a reset, a debt reset, maybe highly inflationary one time, but then on a go forward, the question here, and I put this out in the book, is are we willing to maybe live through that with the promise that once we've lived through it once, it won't happen going forward? In other words, we're now back on sound money and the inflation dragon will be slayed. That's really, in my view, the best possible transition from where we are to where we want to be, hurting the fewest people, which is certainly a huge goal of this transition. Now, will we be smart enough to do that? I don't know.
In that scenario, I guess the people who own assets benefit massively. The people without savings who have like a productive job, they're fine. It's the people with savings in the middle that get screwed. Is that right?
I think that's right because the assets will reprice in the new currency. It's the people who hold bonds and pensions, they'll get screwed because the value of them won't be worth nearly as much as what they were. And the young people who have their entire career in front of them, they'll now be working for sound money and they'll be able to save and they'll be okay. But yeah, I mean, sadly, a lot of boomers will get very badly hurt in that environment. I mean, there's just honestly, there's just no way around it because of the math and what the math is. But it's yeah, it is what it is.
This episode is brought to you by Ledger. If you're serious about protecting your Bitcoin, Ledger has the solution you need. Their hardware wallets give you complete control over your private keys, ensuring that your Bitcoin stays safe from hacks, phishing, and malware. With Ledger's easy-to-use devices and the Ledger Live app, managing your Bitcoin has never been more convenient. Whether you're a long-time holder or new to the world of Bitcoin, Ledger makes it simple to keep your assets protected. If you want to find out more, visit ledger.com. Visit ledger.com and secure your Bitcoin today. That is ledger.com. So with the last sort of two big prints, we had 2008, which was the catalyst for that was obviously the housing market collapsing. Then we had COVID. What do you think the catalyst for the next big print will be?
That's a great question. I just don't know. It could be CRE. It could be the failure of the bond market. I think the bond market is sending some pretty loud signals right now. I mean, here we are, the Fed's cutting rates, and yet bond rates are going higher. And what the bond market is saying is we don't believe in the Fed, and we're worried about future inflation. And so my sense is that the bond market is going to force the Fed's hand. In September of 2023, the 10-year went over 5%, and 12 Fed governors came out and in chorus saying, rate hiking cycle's over. It's, and the bond market calmed back down. But I don't think they can pull another one of those out of their hat. I mean, I think the bond markets are going to continue to fall. Interest rates are going to continue to go higher, and the Fed is going to be forced into some form of quantitative easing and or perhaps even yield curve control. And at that point in time, the bond market is going to say, okay, Fed, sold to you. You want me to sit here and live with a 3% yield and a 12% inflation environment? I don't have any interest in holding these. You can have it. So the bond market's $6 trillion. The Fed balance sheet is $7 trillion. There's how you get to a $50 trillion Fed balance sheet. And of course, what the world sees is, oh my God, we just created $36 trillion more of money. That's massively inflationary. I've got to own something the government can't print. And there are three choices: Bitcoin, gold, and silver. And the prices of those are going to, well, there's a fourth choice, oil, but it gets used up. And those are going to, and real estate too, but that's got a lot of other problems. And those are going to go just berserk. I mean, they're going to go nuts. And so, that's why, having something that the government can't print as your asset that you're holding, I think is really absolutely essential for everybody. It's extremely important.
And while you have those four options, there's probably going to be a winner. And I imagine Bitcoin will demonetize each of those other assets to a degree.
I think Bitcoin wins massively over all the other three. I mean, and the reason it's got two things going on. I mean, look, gold's going to go up. I mean, and Bitcoin's going to demonetize gold, but in nominal terms, gold's going to go up because it's better than fiat. And there is it's only growing at 1% a year, 1.7% a year. But Bitcoin's going to crush gold. And the reason for that is that gold's fully distributed. There's a big Lindy effect on gold, but Metcalfe's law on Bitcoin, Bitcoin is a peanut compared to the size of gold today. I mean, the gold market is a $16 trillion market. The Bitcoin market is 2. So Bitcoin could go up 8x and just be the size of gold. And the total asset market, as Jesse Meyer put out in his great chart, is 900 trillion. So, Bitcoin today is 0.2% of total global assets. I mean, that's just nuts. It's gonna go up 10x. So it's gonna go from 100 to 1 million. So then it'll be 2%, and then it's going to go from 2% to, it'll go much higher. And by the way, gold is low at 16. I mean, they're both going to go much higher because, the global bond market is just going to get annihilated, with all this money printing until we reset. When we reset, it'll be different. But in the meantime, I think we're a long way from resetting. Although I will say this, Scott Bessent, who Trump just appointed Treasury Secretary, has said he understands this. He's actually a gold bug too, which is a positive. And he understands that there could be value in crypto, which to me means he understands Bitcoin. He has said that, he can see some kind of a monetary reset. I think he used those exact words, a la Bretton Woods, and he wants to be at the table when it occurs. I thought, boy, that's fascinating. I mean, and that's why, I was actually in favor of his appointment as a Treasury Secretary. I mean, Lutnick would have been good too. He's a big Bitcoin bull, but this is really going to be brain surgery. I mean, this monetary system it's a tough mess, and to get us through this in a way that's fair as possible to everybody, and back to a system that's based on sound money, this is no small task, and how we get from here to there. I hope for the best, but as you pointed out earlier in the show, it could be real messy. I hope it's not, but it could be. And I think everybody has to kind of prepare for that. But the good news is, again, the key is to avoid war. If the people are here and the assets are here and the technology is here, well, if we have a monetary reset, what does that mean? It means some people are going to lose and some people are going to win, right? Rich people who own their money in fiat and bonds, guess what? They're not going to be as rich anymore. They're just not. But hard workers, people who get shit done, young people, people who own sensible assets, they're going to be protected, and then they'll be okay, and you come out the other side, and it'll be better. So but there will be winners and losers, big time.
Mm-hmm.
But back to the Bitcoin thing. I think it really is important to understand just how asymmetric it is. One point I did not make there, I want to make. It's just that because we're on this adoption curve, it's just, it's going to benefit from monetary debasement, but it's also going to benefit because right now we're at that less than 10% tipping point. And as we cross that tipping point, it's going to go from 10% to 90%. And when it does that, that's how Saylor gets to 13 million a coin. He's not nuts.
Mm-hmm.
This is going to be at $1 million a coin, and then 2, and then 4, and then, and so, everyone, I can't tell you how many people I encounter today who know I bought it a lot cheaper. And they say to me, I can't pay $100,000. You bought it for a much cheaper price. Well, guess what? I sat with Max Kaiser recently to lunch, and he said, look, when I was paying $2, I was mad that Trace Meyer got it for 25 cents. Right? It's all relative.
Yeah.
In 10 years, when it's $1 million, they'll be looking back at people who bought it for 100,000 and think, God, you got a good price.
Mm-hmm.
And by the way, I don't think it'll take 10 years to get to $1 million. I think it'll be probably 5 years. It'll take it outside to get to $1 million. So,
I have the same thing. People say the same thing to me. And the thing that I always respond with is like, I'm still buying it now. Like I've not stopped.
Well, that's right. That's exactly right. Yeah. For savings, there is, in my opinion, there is no better savings vehicle, no better asymmetric bet. I've been in finance for 42 years, excuse me. And I honestly can say that I've never seen anything as good as that looks like this.
Yeah.
Nothing. It's, there are companies that have done as well or better, but they had risk and they had management teams. And this is a system, it's a mathematical protocol, okay, there's a little bit of risk. The core developers all go rogue, but because the nodes are distributed and everyone gets to vote on it, I think that risk has gotten to be very, very small. And so, you're really talking about something that's just going to keep on running. And there's going to be more demand. That's the thing. It's we haven't discussed this, but I try and emphasize to people who are looking at it, this is not some kind of bubble. This is a technical innovation. It's a technological innovation. And what these guys invented, whoever they are, I'm looking at you, Adam, back. What these guys invented, because he's, chancellor on the brink, he's British, what these guys invented is digital scarcity. And so in the past, every single commodity, every form of money has been subject to dilution for thousands of years. Gold, silver, doesn't matter. Here we have a form of money that can't be diluted. That's different. That's significantly different than anything we've had in the past. So therefore, the way this thing is going to perform is going to be significantly different. And I think, in 10, 20, 30 years, there are going to be our kids and people are going to say, well, he was in Bitcoin or he wasn't in Bitcoin. And the difference on the outcome is going to be pretty substantial. At least that's kind of my guess.
Just very briefly to go back to the big print. In 2008, the TARP bailout was $700 billion. In COVID, it got so crazy that they were doing that every 2 weeks, basically. This time, right. Do these have to get sort of an order of magnitude bigger every time they print?
They do. They do by definition because of the laws of compounding and growth. Look at 71, the total U.S. debt, all sector debt. This is, corporations, individuals, the government, was $1 trillion. Today, it's $100 trillion. Okay, and growing rapidly. And anybody who plays around with compounding and compound tables knows that, what is the compound interest of the seventh wonder of the world? I think Einstein said that. Debt's the same way. But it's on the other side of it because you owe it. Compounding your debt, it just gets bigger and bigger and bigger. And so, the next, in the 08 example, they printed a couple trillion over 3 years. And In the COVID example, they printed 5 trillion over 18 months, right? I mean, it's like, wow. Yeah.
It's scary.
The next big print, in my opinion, will be, I don't know, 7 trillion, 10 trillion. I mean, it's going to be big. It just can't be. I mean, and that's the thing. That's why I feel very confident in my thesis because I understand the underlying math so well. Now, where could I be wrong? And the book talks about this too. Where could I be wrong? If the US government got incredibly responsible incredibly quickly, then this thesis would not be as sound as it is right now. And that is to say, they close all the military bases, they create peace all over the world, they cut the military budget 50%, they means test and cut Social Security and Medicare by 40 or 50%, and they balance the federal budget. Well, okay, that changes the monetary debasement thesis that I'm investing in and that all Bitcoiners are investing in. But when I describe those things, and then you kind of consider the odds that those things happen, X some special factors. I mean, I would rate the odds of those things happening as being pretty low, right?
Yeah, I'm definitely not going to be betting on that outcome, though. That's for sure.
Right. I mean, it seems like a long shot. Yeah.
So, just to close out, because this is something I'm definitely going to send to sort of friends and family that are still trying to understand this. Just give us your pitch on why Bitcoin actually fixes this.
Sure. It's quite simple. It allows the proper allocation of capital. It allows people to save for their retirement without having their savings diluted. And it makes, I mean, one thing about being a Bitcoiner is you get really optimistic about how good the world could be based on this. And the longer you've been in it, the more your savings have grown and it starts to work. And you're like, wow, this is really great. It defunds the government because the government cannot take it away from you and they cannot tax it unless you sell it. And they can't benefit from diluting your money because your money is undilutable, and therefore they can't easily fund wars. And so I think wars decrease. And then I would say there's a part of the book where I talk about Alex Gladstein's, the third world cases where the unbanked and, remittances and so on and so forth. I mean, the financial system kind of worldwide is very predatory. I mean, they charge very high interest rates. They don't pay much in interest in terms of returns. If you're working in the United States and sending your money back to, your relatives in some poorer country, between 8 and 12% of that gets raked off by the Western Union or the money transfer services. And, there are people with a Lightning wallet and they get their family member a Lightning wallet and they send the earnings down to them and, it costs a couple of pennies, right? And I mean, these are billions of dollars of remittances. And so, being able to do that is a real benefit for those people. So in my view, it just makes the world a better place in a lot of different ways. It decreases the size of the finance sector. I mean, the whole finance sector is built around, kind of carry games and ways of extracting rents. And it's let the wrong people get extremely rich, the private equity people, et cetera, as a result of borrowing cheap and then, extracting rents out of other people. That stops. I mean, and the best and the brightest don't want to go into finance because they think it's a great way to make a ton of money. They think maybe I should go into engineering and figure out how to make things better and how more efficient. Because really, if you really look at what makes the world a better place, it's engineering and developments. I mean, it's technology and doing things. I mean, the way for human beings to live better is to become more efficient, to do more with less. And that's generally a function of technology and engineering. It's not a function of financial crap. Shoving paper around, playing finance games, that doesn't necessarily make the world a better place. It might make some people very rich, and it has, but at the expense of others. I mean, look at there's a chapter in the book on the private equity game and how all these people, these guys went out and they bought up good, healthy companies. They levered the shit out of them. They paid themselves a dividend. They made a huge profit. The company went bankrupt. The pensions were wiped out, and the employees got fired. I mean, is that good? Is that good for capitalism? Is that fair?
Absolutely not.
No. I mean, it's yeah, but that's what fiat money has allowed and encouraged. Do you know what I mean? And so that game that game will go away if the money is properly priced. There won't be, those operators won't have the ability to borrow money at incredibly cheap rates to take over legitimate, healthy businesses and rob them, so to speak, right? There's just, I mean, the book lays it all out. There are a multitude of ways, in my view, that the world will get much better on sound money. And I can say that also because I remember, the money wasn't entirely sound in 71, but it was sounder than it is now. And it was better. I mean, I lived in a town that had the CEO of Ford Motor Company in it, and he ran one of the biggest auto companies in the world. My father was a retailer. He did okay. And I bet that CEO probably made, 3 or 4 times what my father made, which he obviously should have earned because he was running a huge multinational corporation. My father was running a furniture store. So, but I mean, but today, that ratio would be 400 to 1, I mean, there was a time when there was a middle class in this country. And, the middle class has gotten eviscerated with all this financialization. And so it's just not right, Danny. It's not right. And I remember how it was when it was right. And I'm naive enough or idealistic enough to believe that we can get back there. That sound money will take us back there. I think that's what's changed from then to now. And you can see the outcome now. We all know now is broken. So let's go back and try like what it was then and see if we don't get a better outcome. I mean, maybe I'll be wrong. Maybe we'll try it and it won't be a better outcome. I don't know. But I suspect, I think I've got enough evidence to support my view that it will be better if we go back to sound money.
Yeah, I don't think you're wrong. Amazing. Thank you very much, Larry. That was great.
Oh, thank you.
I can't wait to get my hands on a proper book. But where do you want to send anyone?
Well, obviously, follow me on Twitter. I make a lot of noise there. I would say if you go on, I mean, the book is out on Kindle for pre-order. It's $10, $9.99. The Kindle has or Amazon has a bunch of algorithms. So if you want to support me in the book and sound money and so forth, hop on there and spend $10 and buy one. It'll, when it ships, you'll get it. I'll actually also on Twitter, I'll be posting when it's going to come out. If you really don't want a Kindle copy, at that point in time, you could cancel it and turn around and buy it in hardcover or softcover. Softcover is going to be $18.50. Hardcover will be $26.50. So it's pretty funny. Maybe in the show notes, Danny, you can put a link to this whole thing because I went on Amazon and I Googled the big print Lepard and it came back with leopard prints. And so I got a lot of, fabrics and, pictures of leopard prints. So that
We
was
need to
Google's
change that algorithm.
Yeah, that was that was Amazon's algorithm searching for leopard prints and not the big print Lepard. So maybe if in the show notes you can put a link to the Kindle thing, that would be helpful. But or don't buy the book. Wait till it comes out in paperback or hardcover. But I'll try and be at the shows and signing them for free. I know for certain that I will be at Las Vegas Bitcoin. And I will also be in Prague next summer with my wife because we really want to see Prague. So maybe a few others, but I know I'm going to those too. I'm happy to sign books at those sites.
Brilliant. Thank you very much. Go and buy the book. Appreciate you. Thanks, Larry.
Yeah, thanks, Danny. Really appreciate it.
Cheers.